for the benefits of those who spend time to join, and then due to network issues, I'm recording the meeting. But I'm only going to give it to people who are here, like I said. Okay, good. So this is the book. All right, and then I think there is a history or something. We don't need it. History of candlesticks, not very needed. We go straight to business. All right. So what is the candlestick? It's interesting how we've been trading all along, and then now we have to study what the candlestick is. If you don't know what the candlestick is, then it means that all this while you don't know what we are doing, right? Okay, so the candlestick, the Japanese candlesticks are formed using the open, high, low, and close of the chosen time frame. An important point to note of the chosen time frame, which means that per the time frame that you are using, you are going to see the corresponding with candlesticks. Okay, so if I am using H4 and then you are using H1, then you don't expect the size of our candlesticks to be the same, or you don't expect us to have the same charts. You understand? Yes. If the candlestick close, if the close is above the open, we say that that candlestick is what? A bullish candle. So for example, this is a bullish candle. So this is the open price and this is the closing price. So if the closing price is above the opening price, then we call it what? The bullish candle. So mostly the most important thing is the two, not the color of the candle, because like you see, sometimes I change the color of my candlesticks, okay, because the color is not important. So it's about the opening price and the closing price. And then on the other hand, if the opening price is rather above the closing price, then we call it what? The bearish candle, okay. And then I'm sure that we know this, so we can proceed. Great. So the filled parts of the candlestick is called the real body. This is important, the real body. The thin lines poking above and below are called shadows. We also refer to them as wicks. And I think I like using wicks, okay? So these things, we are talking about this. These are the wicks, these things, these thin lines, they are the wicks, okay? And then the filled body, or where they've written the real body, that constitutes the body of the candlesticks. The top of the upper shadow is called the high, and then the bottom of the lower shadow is called the low. So you realize that both the bullish candle and the bearish candle, they have the same highs and then the same low. What I mean is that the high is above the body and then the low is what? Below the body. That is the same for both bearish and what? Bullish candles. It's important that we note that. Long bodies refer to strong buying or selling pressure. Long bodies refers to a strong buying and then selling pressure. So most of the time, when I say that the bullish move is strong or that bullish candle is strong, then I'm referring to the body of the candle. So this is what you should note. It can happen that the candlestick has a very long wick with a very short body. That is still referred to as what? A wick, whether bullish or bearish, is still weak. Okay, the emphasis is on the body. Of course, if it has a long wick, it tells us a lot about the markets. But over here, our concentration is on the body of the candle. So if the body is very long, then we see that the candlestick is what? It indicates a strong buying or selling pressure. You understand? On the other hand, if the body is very small, then that is what? A very weak selling or buying pressure. Okay, that is it. Now let's look at this. The shadows, they tell us a lot about the candle. The upper and lower shadow gives us important information about the trading session. So if you are using the maybe H4 and then you see long shadows, they tell you a lot about that session. They tell you a lot about the session. So what do they tell us? What do they tell us? Okay, so we have 27 people here. We are recording the meeting, but we are not going to send it to the group. If you need it after the meeting, you send me a message on WhatsApp and I send it to you. Okay. All right. Great. Upper shadows signify the session high. The lower shadows signify the session low. Let's skip to this point. If a candle has a longer upper shadow and a shorter lower shadow, this means that buyers flexed their muscles and bid price higher. So we are talking about if the candle has a longer upper, this is what we are talking about. This is this scenario. Okay, so if we see something like this in the market, it means that when the session started, buyers pushed the market to this level and the sellers say, hey, you can't go and leave us behind. Now they took charge and then they pushed the market to this level and then it closed here. Okay, it closed here. This is bearish, so it will close below. So it closed here. So if we see something like that, what does it mean? Okay. So on the other hand, if a Japanese candlestick has a long lower shadow and shorter shadow, this means that sellers flashed their washboard ups and then forced price lower. So this is it. They are talking about this session. So if you see something like this, what it means is that when so you know this is a bullish candle, so it means that it's opened here. It's opened here. It opened here. And then the sellers pushed the market all the way down here. But buyers came in and then they forced the price to close above. So the price closed what around this level. So we must understand the psychology behind this. It's not just about the English, the psychology. If we are seeing something like this, then it means that the first case, it means the sellers are preparing to take over the market. The second case, it means the buyers are preparing to take over the market. Okay, this is what I want to mention for now. We will talk deeper about it. Now let's go to candlesticks pattern. So we are done with the candlesticks. Okay, that is candlestick anatomy. You should know the opening price, the closing price, the lows, and then the what do you call it, the high. And then you know that if it has a long body, it indicates a strong selling or buying pressure. If it has a short body, that is what a weak selling or buying pressure. If it has a long wick, we have spoken about that. Now, the candlestick patterns are one of the most important, the most powerful trading concepts. They are simple, easy to identify, and very profitable setup. Okay, a research confirmed that candlestick patterns have a high predictive value and can produce positive results. In fact, this is the reason why most traders use the candlestick patterns, okay? Because this is price action, okay? This book talks about price action. And then you realize that almost every successful trader, that is what I use. That's the term I prefer to use. Almost every successful trader uses price action. And then we have the rest who are worrying themselves with, what do you call it? Indicators, okay? When I talk like this, I don't mean that if you use indicators, you're trading wrongly or something. But then I think the market is so simple to understand and you don't need any other thing, you know, it just makes it complicated for you. Okay, so I wish that you can desist from that. Now, I like this part. I'm not going to introduce you to a holy grail. This trading system works. Of course, price action works, but be prepared to lose some trades. Some people loaded their accounts today. I'm talking to you. Be prepared to lose some trade. Losing is part of this game. If you are looking for 100% winning system, I highly recommend you stop trading and go look for another business. This is the part of the book that I love most. Okay, if trading is a win-win situation, Charlie, by now, then I'll be rocking shoulders with Bill Gates and co. But that's not the case. You understand? That is not it. We win some, we lose some. All right, we win some, we lose some. Today has been a good day. Those people who followed us from last night, today has been a great day. Yeah, but sometimes we have bad days. Yes, losing this part. Senior Albert, I see you. Of course.
Yeah, I did.
Losing is part of the game, and then you just need to be prepared for the losses.
True.
The truth is that if you are not ready to accept the losses, that's when you become. That's the secret. Yes. If not, you'll be seeing it as a win-win situation, and for that matter, you think every trade that you take, you are going to win. It doesn't happen like that. All right, great. That's enough. Let's continue. So now the most important things, these are the chart patterns, and then it's not everything in this book that we are going to use. There are a lot of chart patterns, and we don't need all of them. We are only going to talk about the most important ones, okay? So especially the ones that I use. So when I get to the one that I don't use, I'll skip it, okay? Great. This is the bearish engulfing. This is the bearish engulfing candle. Bearish engulfing candle. So the literal meaning, engulfing. If something engulfs something, it means that the latter overshadows the former, all right? That is how it is. So if we say bearish engulfing candle, then it means that the preceding candle must be a bullish candle. And then the current candle should be what? A bearish candle. And that candle should be bigger than what? The bullish candle. And then most of the time, it should be at least twice of the body of the previous candle. This is what you should focus on. The body, we are talking about the body. So sometimes you realize that the weight will overshadow the candle, but that is not where our emphasis is. We are considering the body, and then we know that the opening and the closing session gives us what the body of the candle. So for example, this situation, when you see something like this, then we call this what? A bearish engulfing candle, because we have a bearish candle overshadowing what? A bullish candle. And let's go and look at the significance. So in case of a bearish engulfing bar, this pattern tells us that sellers are in control of the market. When this pattern occurs at the end of an uptrend, this indicates that the buyers are engulfed by sellers, which signals a trend reversal. Now let's look at the example. So this is what I want to stress on. The fact that bearish engulfing candle or bearish engulfing bar signifies trend reversal doesn't mean that anywhere we see it in the market, we have to look forward the trend reversal, or we have to start looking for sales. No, it says that when this pattern occurs at the end of an uptrend, what is the end of an uptrend? What level is the end of an uptrend? Somebody should answer this. What level do we find at the end of an uptrend? What level?
Resistance.
Exactly. So it means that we are only going to apply this when we see it around the resistance. You understand it? So if that's not the case, then when we go into the market right now, we'll see a lot of what? Bearish engulfing candles. And you can see some in what? A very strong uptrend. You understand? So when we see them around the resistance, that's only when we are going to what? Consider them. And then we note that there could be a possible trend reversal, and then we prepare for it. You understand? Okay, great. Let's continue. Now, of course, the opposite will be what? A bullish engulfing candle. And then we expect to see a smaller body, what? Bearish candle, and then a long body bullish candle. And as a matter of fact, if this is the opposite of the other one, then we expect to see this at the end of what? A downtrend, and it signifies a trend reversal. So it means that if you're in a downtrend, and then we see bullish engulfing candles around a support, then we start looking for what? Buys. Okay, so that's just a summary of this one. We will skip and then we go. Okay, great. Now we are talking about the doji candlestick pattern, the doji. So this is how the doji is. Now the doji has two long wicks, low and then the high. Now you cannot really differentiate between the opening and the close because it's almost of the same size. It happens around the same price. So when you see something like that, it's what? A doji. So what is the significance or what's the psychology behind this? So ideally, when we are in an uptrend, we expect the market to create series of higher highs. So we want, or we expect the price to keep on rising. But if it gets to a point and then we see that there are introduction of dojis in the market, what it's telling us is that the buyers are becoming confused. So they can't push the price further. Okay. If that is the case, then the sellers will take advantage of that because the market is a fight between buyers and sellers. So if the buyers are getting tired, then the sellers will take control. So doji, you can use it in an uptrend and you can use it in a downtrend. So if you see a doji in an uptrend around a resistance, the most important thing, around a resistance, then you think of what? A trend reversal. So you start looking for what? Sales. Okay. So in this case, you can start marking lower lows, and then when it breaks and retest, you can join the sell. Okay. So on that note, what I mean to say is that we are going to see a lot of dodges in the market. We are not going to use all of them. We are only going to consider the ones around key levels. You get it? Great. Now the doji, we have different types. So this is the main doji, and then we have the dragonfly doji. This one. So this one has a very long wick, a low, and then you see the the bar up here. Sometimes you will see a very tiny high, the wick, upper shadow. I mean, a very tiny upper shadow. Sometimes too, it's not there at all. So if you see something like that, what does it indicate? Okay, so as a matter of fact, I think we've spoken about this. If you see something like this, price was pushed down toward this low, and then it was forced to move up, and then it closed around this level. So it tells us that some people are getting into the market. Okay, so if we look at this illustration, you see when the market is dropping, and then we see something like this, then we know that the sellers are getting tired, and then buyers are now getting ready to take over the market. Okay, buyers are getting ready to take over the market. Great. So this is what the dragonfly doji. Let's look at this. So you see, I said over here that this doji, you can see it in an uptrend or in a downtrend. And depending on where you see it, it is a trend reversal. So if you see it in an uptrend, then it's going down. If you see it in a downtrend, it's going up. But for these ones, if you see a dragonfly doji in a downtrend, straightforward, you are looking for what? Buys. If you see this, the gravestone doji, then we are talking about what? The opposite. We are looking for sales. Okay, so the same way, price was pushed all the way up here, but it was forced to close below. And for that matter, we know that sellers are coming into the market. So we start looking for sales. All right. So all of these things, we use them. Morning star, I don't normally use morning star. Evening star, I don't use it, so I'll skip it. My favorites, the pin bar. This is what I use mostly. Okay. Yes. Now the pin bar, it looks much like the dragonfly doji. Yes. So most often I use them interchangeably. Yeah. So if you see something like this, of course, we have already explained. So when you see something like this in the market, in a downtrend, on a support, then it is a trend reversal. So we are going to start looking for buys. Okay, we are going to start looking for buys. We can also use the pin bar as what an entry confirmation. Once we see it, we take our entry. Yes, we can do that. I think when we go to the chart, I'll show you something like that. So let's, and then we have you see, this pin bar is the bullish pin bar. The hammer is the bullish pin bar. We have the bearish pin bar, and it's referred to as the shooting star. Okay. So if this one is for buys, obviously this one is for sells. Okay. So when you see this in an uptrend, then it tells us that sellers are about to take control of the markets. Okay. Yes. And of course, we are going to look for this in an uptrend, where an uptrend ends. That is on a resistance. And then we start looking for sells. Great. And the Harami, I don't use the Harami, so we can ignore this. Sometimes I use the tweezer tops, but we can also ignore this one. Okay, let's move forward. Great. So before we move to market structure, I don't know if you have any question on candlestick anatomy and then the candlestick pattern. If you have any question, you can ask before we move to market structure, the most important thing for the day. Is there any question on what we have discussed so far?
Yes, sir.